The Pi network captured global attention with a simple yet revolutionary idea that resonated with millions across the globe. In a world where cryptocurrency mining was often seen as complex, expensive, and out of reach for everyday people, Pi network promised something radically different. Imagine being able to mine cryptocurrency from your phone with just a daily tap. No technical skills, no expensive hardware, and no draining your phone's battery. This approach made digital currency accessible to anyone with a smartphone, breaking down barriers that had kept so many on the sidelines of the crypto revolution. This unprecedented level of accessibility fueled explosive growth, quickly building a vibrant community of over 60 million users. People from all walks of life, from students to retirees, joined together, united by the hope that their daily taps would one day translate into real, tangible value. The sense of belonging and shared purpose became a driving force behind Pi's viral spread. For many, Pi was never just a get-rich-quick scheme. It represented a movement to democratize crypto, giving ordinary people a stake in the future of digital money. The project inspired conversations about financial inclusion and the power of technology to bridge economic divides. Yet, despite the excitement, the long and closed mainnet phase brought challenges. Pi coins had no official value and couldn't be traded or spent outside the app, leaving many users in a state of uncertainty and eager anticipation. The community's faith and optimism held the project together, even as anticipation and frustration grew with each passing month. People waited, hoping their patience would eventually pay off. As the long-awaited open mainnet approached, speculation and misinformation surged online. Scammers and opportunists exploited the hype, spreading rumors and false promises to unsuspecting users. The journey from a simple app to a tradable asset was about to get far more complicated, with new risks and opportunities emerging at every turn. Now, more than ever, separating fact from fiction became crucial for Pi's massive user base. As the project entered this pivotal phase, the world watched to see if Pi network could truly deliver on its bold promise. Before Pi's official open mainnet, a wave of excitement swept through the crypto community as several exchanges began listing tokens labeled Pi. For many, this seemed like the long-awaited moment when their mined Pi coins could finally be traded for real value. Social media buzzed with speculation, and forums filled with hopeful posts from users eager to cash in. However, beneath the surface, confusion was brewing. Many users genuinely believed their hard-earned mined coins were now accessible and tradable on these platforms, but in reality what was being offered were unauthorized IOUs, essentially speculative placeholders that had no connection to the actual Pi network. These tokens were not backed by the Pi core team, nor did they represent real Pi coins. Instead, they were simply bets on what the future value of Pi might be, with no guarantee of ever being honored. Exchanges, eager to capitalize on the hype and attract new traders, listed these tokens, despite repeated and clear warnings from the official Pi network team. The allure of quick profits and the fear of missing out drove many to jump in without fully understanding the risks. The Pi network core team made their stance unmistakably clear. Real Pi could not be traded, withdrawn, or exchanged outside the official app during the enclosed mainnet phase. Any token claiming otherwise was not legitimate and should be treated with extreme caution. The existence of these fake tokens led to wild price swings, creating false expectations about Pi's value and exposing unsuspecting buyers to significant financial risk. Many saw their investments evaporate overnight as prices crashed or tokens were delisted. Anyone purchasing these tokens was essentially gambling on a promise, not acquiring the actual asset. If the real Pi launched with different rules or values, those holding fake tokens could lose everything with no recourse or compensation. This episode served as a stark reminder of the dangers of acting on rumors, hype, and unofficial sources in the fast-moving world of cryptocurrency. Misinformation can spread quickly, leading to costly mistakes. Despite numerous warnings from the Pi network team and seasoned crypto experts, many individuals fell for the hype, ultimately learning a painful lesson about the importance of due diligence and skepticism. The saga of fake Pi tokens underscored a crucial point. In crypto, patience and waiting for official announcements are essential to avoid unnecessary risks and losses. Only Pi coins released and recognized by the core team through the official app would ever have true value and legitimacy in the ecosystem. Trusting anything else was nothing more than a risky gamble with your money, a lesson that many learned the hard way. On February 20, 2025, After years of anticipation and countless rumors, Pi Network officially launched its open mainnet. This long-awaited event marked a historic turning point for the Pi community, as the project finally transitioned from a closed ecosystem to a fully open and accessible blockchain network. For the first time ever, real Pi coin could be traded on external exchanges, opening up new possibilities for millions of users worldwide. The ability to buy, sell, and transfer Pi outside the app was a game-changer, transforming Pi from a digital experiment into a real cryptocurrency. This milestone ended years of waiting and speculation, as users could now test Pi's value in the open market. Excitement surged across the globe, with early adopters and newcomers alike eager to see how Pi would perform against established cryptocurrencies. Major exchanges like OKX and BitGet quickly listed genuine Pi, providing liquidity and credibility to the project. Their support helped legitimize Pi in the eyes of the broader crypto community. BitGet even launched a massive $60,000 airdrop campaign to boost trading activity and attract new users, making the launch even more exciting for the community. Binance, the world's largest exchange, took notice as well, holding a high-profile community vote on whether to list Pi. This move signaled growing industry recognition and hinted at even greater adoption in the future. For users, the difference between fake and real Pi was now clear. Only coins on officially supported exchanges counted. This clarity helped protect users from scams and ensured that only legitimate Pi coins had value. Those who completed KYC and migrated their coins could finally participate in real trading, unlocking the true potential of their Pi holdings. The migration process became a crucial step for anyone wanting to join the new open economy. The open mainnet launch turned digital points into a tangible asset, giving real-world value to what was once just a number on a screen. For many, this was the moment they had been waiting for since the project's inception. Now, the world could finally answer the question, what is Pi really worth? The journey had just begun, and the future of Pi Network was more promising than ever. A persistent myth in the Pi community was the global consensus value, or GCV, the idea that Pi would launch at a high, community-agreed price. Numbers like $100 or $314 circulated widely, but the Pi core team never endorsed or confirmed any preset value. In reality, crypto prices are set by open market supply and demand, not by community votes or rumors. The GCV myth led to unrealistic expectations and opened the door for scams promising guaranteed high returns. Now that Pi trades on real exchanges, the market, not wishful thinking, sets the price. The lesson: ignore GCV rumors and focus on actual trading data. Understanding this protects users from disappointment and fraud. In crypto, only the market decides value. By its open mainnet launch, Pi Network boasted 60 million users, a staggering number for any crypto project. This huge community is a powerful asset, but only those who completed KYC could move their coins to the mainnet. Out of 60 million, about 19 million passed KYC, and just over 10 million migrated their coins to tradable wallets. This phased approach managed the initial supply and helped stabilize early trading. The numbers reveal Pi's unique structure: a massive potential network, a smaller group of verified users, and an even smaller group with tradable coins. Completing KYC and migration is essential for full participation. The journey from app tapper to real coin holder is a multi-step process. Pi's debut on exchanges brought wild price swings, surging from $1.70 to $2, then crashing to $0 in 1606 within hours. This volatility is typical for new coins, but can shock first-time traders. Low liquidity made things worse. Even small trades could move the price dramatically. Despite a high theoretical market cap, actual trading volume was limited, making it hard to sell large amounts without crashing the price. For holders, this means real value depends on what you can actually trade, not just the listed price. Extreme volatility and low liquidity make Pi risky for speculative trading. Never invest more than you can afford to lose. Price stability will take time, and caution is essential. Despite the hype, Pi Network faces serious criticism from industry leaders. Bybit's CEO called Pi a scam, citing warnings from Chinese authorities about fraud and data risks. Critics also point to centralization. The core team controls most mainnet nodes, raising questions about true decentralization. The lack of smart contract functionality at launch limits Pi's real-world utility, making it mostly a speculative asset. Slow development and unclear roadmaps fuel skepticism about Pi's long-term goals. These red flags mean users should approach Pi with caution and do thorough research. Hope is high, but skepticism is warranted. In crypto, protecting your assets is your top priority, especially with Pi now tradable. Always rely on official sources for news and updates. Ignore rumors and unofficial listings. Never share your private keys or wallet passphrase. No one from Pi will ever ask for them. Scammers use fake sites and support chats to steal your credentials. Guard them fiercely. Only trade on reputable, officially supported exchanges. Be prepared for volatility and never invest more than you can afford to lose. Avoid anyone promising guaranteed returns or asking you to send Pi for more Pi. Stay skeptical of unsolicited offers and insider tips. By staying informed and cautious, you can protect your Pi and navigate the ecosystem safely. Pi's journey from mobile app to tradable coin has been dramatic, with the open mainnet marking a new era. The difference between fake IOUs and real Pi is now clear. Official exchanges are the only safe place to trade. The GCV myth is debunked. Only the market sets Pi's price, not community wishes. Volatility and liquidity challenges are normal for new coins, but require caution and patience. Skepticism about centralization and utility remains valid. Users must demand transparency and real progress. Protect your assets. Never share keys, beware of scams, and trade wisely. Pi's future depends on decentralization, utility, and user vigilance. By staying informed and cautious, every user can help shape Pi's next chapter.